Hey everybody, like always, bottom line comes first. If you don't have time, here's the quick summary of what's going to happen in this video. Now, everybody's talking about Tesla stock again because it's up again, because it had great delivery numbers, and it makes headlines again. But that's not the main story here. In fact, it is almost irrelevant. In my opinion, what's going to happen with Tesla stock, it's going to go from $250 to $400 per share a lot faster than most investors realize. People think we have all this time. We don't. Now look, the reason this is going to happen doesn't have to do with trading or technical analysis. It's based on fundamentals. I see a company that's doing a lot better over the past 3 years. The business has almost tripled over the past 3 years. The company is doing way more sales, more profit, more revenue. Every single metric I look at, it's gotten better significantly over the past 3 years. And yet, the stock is down 50% from the all-time high. And if I take a 3-year price action, the stock is up 15%. So when I see a stock that's down 50% off the high and is up only 15% over the past 3 years, while the business has pretty much doubled, if not tripled, to me, that's a very clear sign of what's going to happen. The best friend of a great business is time. The worst enemy, by the way, is also time, but that's of a bad business. So if you have a great business like Tesla and the stock price is lagging behind the business, eventually that gap is going to close. It always does. And this is not going to be any different. So that's kind of the bottom line here. If you just needed that, you can go ahead and leave this video. I don't mind. But don't click nothing, don't smash nothing, don't buy nothing. If you want to stay, I'm going to give you a little bonus at the end of this video. I'm going to give you my checklist of how I knew Tesla is going to go back up when everybody was negative on the stock, how I knew the 9 stocks I called in 2023 that gave me an average return of 160% per stock. A lot of interesting stuff in this analysis. If you have a few minutes, spend it with me. If not, you got the bottom line. You're free to go. No hard feelings. Okay, so about 3 weeks ago, I made a video and I told you, hey, Tesla isn't going to stay below 200 for very long. It's just a question of time. If you watch that video, you've made a lot of money. In fact, you've made like 30% of the past month. That's great. But now we are in the next stage. Currently, the stock is at 250. And the question for a lot of investors is the stock going to go to the next stage? And why I think it's going to go to the $400 region. It's not going to stay below 300 for very long. And here's my kind of logic behind it. As you know, I'm not a trader, so I'm just a fundamentals guy. And as a fundamentals guy, here's what I'm seeing. Autonomy, which is going to be a quasi-monopolistic market for Tesla with 80% gross margin because it's literally licensing, almost ready. We have energy deployments doubling. And we have humanoid robotics basically going out and being developed way before the rest of the industry understands this is the next S-curve for the entire industry. Much like with EVs, where Tesla started before the curve, they're starting the humanoid robotics way before everybody else. That in itself is worth a lot more than the current entire market cap of Tesla. Now, the net income over the past 3 years of Tesla is up 1,000%. Imagine a company that increases its net income, actual dollars, by 1,000% in 3 years. Revenue is up 160% for that time period, but the stock is down 50% from the all-time high. In fact, despite the recent increase in the stock price of 26% of the past 5 days, the stock is still down 7% year to date, while 10xing the net income over the past 3 years. Now, the stock is getting cheaper while the business is getting better. It's a no-brainer. It's a W. It's quite easy. In fact, revenue of the past 3 years went from $35 billion to $95 billion, so almost tripled. Stock is up 15%. When I see these gaps created, when I see the revenue goes up and basically 3xing, while the stock goes up by 15%, I know that gap is going to close. I told you 3 weeks ago this is going to happen. I've been telling you that Tesla is going to do that since 2020. Nothing has changed. FSD and Optimus on their own, are bigger than whatever Tesla is worth today. And you're literally right now getting them for free because you're literally paying just for the auto business with some implied increases in sales. Nothing too dramatic. You have to understand that $700 billion of market cap, which sounds a lot, is nothing once FSD and Optimus becomes mainstream. FSD is going to be a quasi-monopolistic licensing deal to the entire auto industry, which Tesla is going to collect for with literally 80% margin. And Optimus is going to change the game just like AI did, if not bigger. Now look, how did I know this? How do I know this? What makes me eligible to even say these things? Look, in the beginning of 2023, I started making videos about companies which I thought would do great in the next 2 years. And over the course of 2023, I've covered 9 stocks. I've said, hey, these 9 stocks are going to be great. Plus, I've also talked a lot about investing in the S&P 500, so we can include that as well. Now, let's talk about these 9 stocks. I've said, hey, Google, Tesla, Palantir, CrowdStrike, Bungie, SoFi, ANET, SMCI, NVIDIA, and obviously the S&P 500 would be a great investment in 2023. Now, we are right now 18 months removed from the beginning of 2023, and right now, these stocks on average are up 116%, and they include names like SMCI that exploded out of the stratosphere, CrowdStrike, ANET, Palantir, and even Tesla did quite nice. Now, in the meantime, the index gave you 44%, which isn't bad, but that's more than double than the index. So how do I know these things? Am I a genius? Do I have a crystal ball? Am I this great investor? No, it's not about being the world's best investor. It's not about being the world's best trader. It's not about having a crystal ball or a gut feeling. It's about following a very simple system. Now look, this system right here on the page, I'm going to tell you right now, it's free. Look, I look at 8 elements with a company. And if I find those 8 elements attractive, I invest. Number 1, does the company have increasing revenues? Check the box on Tesla. Check the box on Palantir. Do they have increasing cash? Check the box on Palantir and Tesla, my 2 favorite companies. Do we have a founder CEO? Now, that's debatable in the case of Tesla, although the court ruled Elon should be labeled as the founder, but I'm going to let it go. I would say that Elon is quasi-founder at least, and obviously Alex Karp is Palantir. Do we have recurring revenue? With the case of Palantir, with AIP and Foundry, definitely. With the case of Tesla, FSD is going to be one of the biggest, if not the biggest, recurring revenue models in the auto industry. Do we have pricing power? With Palantir, definitely. The top 20 clients are paying $50 million per year each. With Tesla, they're able to sell a vehicle with a premium. I'm not familiar with any other company in the auto industry that sells value, that doesn't sell price. There's very little things in the world that are being sold that are based on value. Apple does it with the iPhone, for sure. In the case of Tesla, the idea is that to push a car at these prices that competes with much cheaper models, especially now from China, that's pricing power. Number 6 is total addressable market, TAM. Do we have a massive market? In the case of Palantir, the entire AI industry is definitely massive. In the case of Tesla, we have engineering, we have software, we have robotics, we have energy, and obviously the auto industry and software. There's such massive TAMs for both these companies. Do we have client stickiness? In the case of Palantir, the net dollar retention is above 110%. In the case of Tesla, I don't know of any single person who drove a Tesla and then switched back to Ford. It doesn't happen. Once you drive a Tesla, you stay with a Tesla. And number 8 is very, very important. Can this company sell during bad times, during times of crisis? Tesla during the pandemic sold like hotcakes. Palantir does the same because of their government business and because their top tier clients really are not that sensitive to interest rates and none of this. So with the combination of these 8 factors, that's why 40% of my portfolio is in Palantir and 20% is in Tesla. Quite simple. And obviously, there's nothing that's preventing you from using these principles yourself. It's absolutely free. I just gave it away. Use it every single day. Now, if you actually want to learn a little bit more about this and go a little bit deeper and get better at this, I invite you to check out our academy, patreon.com/Tom Nash. We have a whole academy dedicated to making people better long-term investors. If that's something you potentially are interested in, check it out for 30 days, money back guarantee to anybody who's not fully satisfied for whatever reason. And of course, you also are welcome to join our community, which is 100% free to join, discord.gg/Tom Nash. Join up. We just crossed 12,000 members. It's a really great community to talk about stocks, Tesla, Palantir, and other stock as well. And if you want to get better at analyzing stocks, check out Stock MVP, stock-mvp.com. It's a software I created for retail investors to kind of give them a Bloomberg terminal experience without all the costs associated. It's basically $20 per month, and you get to run your DCF models, look at what analysts are saying about a company, look at what insiders are buying and selling, run your own modeling, understand the financials, basically an everyman tool to analyze every stock in the market. Check it out. Tell me what you think in the comments below. If you hate it, if you love it, I'm open to all opinions. Thank you so much. I'll see you in the next video.